We have gotten quite some good earnings for the fourth quarter, record percentage of companies beating by record amounts. The issue is that the beats have not been rewarded. So I don't think investors are paying as close attention to this earnings season as they normally would, because it's all about where we're going in the post-vaccine world. And a couple of things that stood out to us as very bullish signals this week. Number one, the huge upside risk we now have for fiscal policy, packaged closer to President Biden's proposed $1.9 trillion now seems feasible. And as well, number two, we've really seen consensus expectations for vaccinations get pulled forward once again. They were slipping into the third quarter. Now they've gotten pulled back to the second quarter. So a way to get through the tough time and also a light at the end of the tunnel for where we're going. So we still think risk-on positioning makes sense here with a cyclical bias.
Gabriela, clearly part of the volatility, particularly late in the month in January, was due to the short squeeze and the GameStop retail phenomenon. Was that the case for all of January? And is it a little bit overconfident to see the volatility pull back this week and think that's now the norm for the rest of the year?
Well, I think clearly the increase last week had to do with technical factors. And we had a big adjustment that was done by hedge funds last week, degrossing by the most that they had done since March of 2020. So the effects of those technical factors have waned this week, and you see volatility dropping. But let's be honest, the VIX is still at 21 times. So volatility is still more elevated than it was pre-pandemic. And to me, that's a sign that investors are still actually expecting some risks up ahead. We know vaccinations are not going to be a breeze. So to me, it's actually comforting to see that volatility levels, while they've fallen, they are still elevated.
Shepard Smith here. Thanks for watching CNBC on YouTube.